Yo, hello and welcome guys to today's trade recap. Hey man, another day, another fucking W. As you can see, the trade that I've told you about in the last video, the trade breakdown and identifying my bias was right for both pairs, GBP GPY and USD GPY, and I did only took a trade on GJ because the trade my setup appeared on GJ before USD GPY, and really it fucking happened on both pairs. And if you don't know anything what the fuck I'm talking about, here is the video of me talking about the bias on GJ. Structure right here. After sweeping out all of these Asian session highs, make 4-hour liquidity sweep, broke structure on the 15-minute, then retrace into some sort of continuation conferences like breaker block, CISD, order block, equilibrium, fair value gap, anything, literally anything. And then after that, I'll be highly waiting for a 5-minute or a 1-minute broke structure to the downside to confirm the move of the bearish order flow, and then maybe price is going to. And my target will be these equal lows, which is the Asian session lows and these hourly lows. That's it. You heard it right. I don't have to explain any fucking thing. We did it right. My bias was hit for the day, and I could have made more money, but I didn't want to risk it much because, as I told you, the daily time frame was bullish, and I didn't want to risk it more. So without further ado, don't forget to smash up that like button and to definitely hit that subscribe button, because we are fucking moving so fucking fast, bro. We are moving so fast. We're already so fast, so oh my god, I can't talk anymore. We did a lot of things. We are making good moves. We almost hit 180. We are 174 legends. Please subscribe, bro. Please. That will make my day, bro. Please. That will help me so much in my journey. So, after you subscribe, let's go straight into the video. So, I'm going to re-explain now why I did enter this trade. So, on the daily time frame, as I told you, it was bullish. Why? Because we're in a bullish uptrend. We didn't broke, and this candle was bullish. So it kind of looked like we need to take out these highs and fill in this fair value gap. So that is my bias for the that is the daily time frame trend. So then I wanted to zoom in to see the price on the lower time frame, how is it doing. So we have these previous daily highs, these previous daily lows, and we have these 4-hour highs, basically the Asian session highs and these Asian session lows, and we also have these 4-hour lows and these 4-hour highs. So after that, let's get down to the 1 hour. What do we see? Okay, London session opened, we came up, we took out the Asian session highs, we filled in this order block. After that, what happened? We took out the 4-hour highs. And then, as I told you, what do I want to see? I want to see 4-hour liquidity sweep. So on the 4-hour, it looks like a sweep. We took out these highs. We filled in the order block on the hourly, and we swept out on the hourly and on the 4-hour. After that, what I wanted to see, as I told you, I wanted to see a break below these lows to break structure, and then kind of retracement on the lower time frames, on the 5-minute or on the 1-minute or anything, and then find an entry with the continuation confidences on the lower time frame, and then my target will be these equal lows. And I could have targeted these lows or even these previous daily lows, but I wanted to play it safer because, as I told you, the daily was bullish, so I didn't want to risk it more, but the trade idea was very clear. So let's go in the 5-minute. Let's show you. Hold on. So on the 5 minute, we have this CISD. On the 15 minute, we came down, we refilled in the CISD series of down candles, close below CISD, retraced back into this fair value gap, and I think equilibrium. Yes, we retraced into equilibrium, and then what I want to see. Also, we had this breaker block. I have this breaker block. Scale down to the 1 minute. Let's wait. We wait for a break of structure to invalidate the bullish order flow, and as you can see, boom, broke structure, enter off of this candle. So that's it. Enter off of that candle. The stop loss will be at these 5 minute highs. These 5 minute highs above the 5 minute fair value gap. My only one and only take profit will be at these relative equal lows. Price did end up quickly running through profit, and then price did retrace back higher. I was not very worried, to be honest, because my stop loss is protected, and if anywhere price want to stop me out, then the trade idea will be invalidated. But I trusted the trade because we had these equal lows and a lot of generating sell side liquidity to the downside that price needs to be taken. So that's it. I trusted the process, I trusted my analysis, I trusted the trade, and it went in my favor. Also, I want to show you the trade on USD GPY, because on USD GPY also I was bearish. I'm going to show you now the screenshot before the trade. So you could have entered this trade and made a lot of money. So hold on, this is the screenshot. We have this 4-hour fair value gap. The bias is bearish. We did a market structure shift right here. The trend bias is bearish, turned out into bearish. We were in a bullish order flow, then invalidate that with the market structure shift, retrace back into the 4-hour fair value gap. What I want to see, Asian session highs get swept, 4-hour highs that get swept. After that, what I want to see, a 15-minute break of structure below this 15-minute fair value gap. Hold on. We have this 15-minute fair value gap that I wanted price to invalidate. Boom. What will happen next? Price immediately after breaking structure now right here, we invalidate this 15-minute gap, scale down to the 5-minute. To be honest, you could have just, hold on, let me delete this. You could have just after seeing this getting invalidated, hold on, so you could just after invalidating this gap, price went up, we just took out the internal range liquidity right here, and then what happened, 5-minute invalidation, then scale down. I don't know if this is an SMT or not, the chart is not in front of me. So you could have just enter after seeing price breaking these lows before, because the so let me explain why this is not the same thing on GJ. So on GJ, I need to find a lot of lower time frame continuation confluences like fair value gap, retracement back into equilibrium, retracement back into CISD, retracement back into breaker block, a lot of confluences. Why? Because the higher time frame is against my bias, and here the higher time frame is aligned with my bias. The higher time frame is bearish. I'm bearish. The higher time frame is bearish. What I want to see, lower time frame internal range liquidity, which is got swept right here, invalidation of a 15-minute gap, boom, happened, and then you don't really need much. So if you waited for this 15-minute to close up, you see this retracement back into equilibrium. After that, you just wait for this 1-minute inversion, you enter straight up after the inversion of, after the close of this candle, your stops will be above this breaker block, and your TP will be all the way down to these lows, or hold on, to these lows, these Asian session lows. You could have banger 1 to 2 risk to reward. Easy trade, easy price action today. Market has been given a lot of opportunities lately. The trade on GJ, we crushed it with a pretty much 1 to 3 risk to reward. This is so much fucking beautiful. We are back in business. We're making a lot of fucking money.
6 o'clock.
And that's it. That's as easy as that. And by the way, if you don't know anything about what the fuck I'm talking about, you have no clue what the fair value gap is, what breaker block is, what a fucking Fibonacci is, what is equilibrium is, all of those things, and all of my strategy, all of my confluences will be in my trading book that I have created for beginner traders or intermediate traders, whether you're still new or you have some advantages in this trading space. So if you are interested, you can find the link in my description. You could look for it up. It's a very valuable book. It will literally teach you a lot of things, from psychology to hidden information to funded accounts to fucking strategy, confluences, every single thing. So if you're interested, go see that. And after this trade, I'm going to journal my trade inside my Notion template that I've created for trading. Also, you can find that in the description. So without that being said, thank you guys for watching. I catch you guys up tomorrow in the next one. Peace out.